In my opinion, SoFi stock is one of the greatest hidden gems in the entire stock market. And I'm going to show you from end to end exactly how they're going to attain the attention of shareholders and how they're going to reward them over the next 10 years. Let's jump in. 10,854 shares of SoFi stock is the exact amount that I believe you will need in order to retire off this stock by 2033, or exactly 10 years from now, when I believe this stock will be worth $92.18. That would represent two things: a 16x in the value of SoFi stock shares, or a 32% compounded annual growth rate. Now, considering the idea that the stock market on average returns about 10% per year, it is quite hard to fathom that a single stock in your portfolio can actually return over 30% annual return. And to an extent, I have a hard time believing that SoFi will be able to keep up that growth trajectory, but the thesis is built off these very strong three components. Starting off with company fundamental expansion. I took a look at SoFi's main key metrics, including their members, all the products, all the sub-products, as well as their technology platform, and then the actual money that they're making on the back end. All of these growth rates from 2019 all the way to 2022, just in a span of 3 years, has grown exponentially. Now, a lot of this growth did actually have to do with the COVID-19 pandemic, and having people not be able to go into their own banks mean that people would actually start to bank digitally. But even after that pandemic, on top of very accelerated numbers, SoFi has still been able to keep up a very impressive growth rate. And no matter which metric you look at, from members, revenue, or even EBITDA, you can see that they are vastly outperforming the overall broader markets. And this is not even SoFi at its fullest form yet, as they're starting to put more emphasis on a direct deposit client on their members, meaning that once people actually sign up for this, it'll increase our average revenue per user or average revenue per product. For example, in the latest quarter that SoFi had just announced, Q4 of 2022, SoFi actually came out to say that in a year-over-year basis, they went from $21 on an average revenue per product in their financial services side, upwards of $40 on an average revenue per product. That's almost a doubling in a single year. Even on the technology platform side of things, where SoFi is selling their own technology that helps them gain clients, they're selling that to other financial institutions. Well, that product itself is also growing much faster than the broader markets, which should lead to elevated levels in the stock price going forward. I believe that the company's fundamental expansion will make up for 45% of the overall price increase of the stock over the next 10 years. But this brings me on to my second point: stock valuation expansion. I'm going to be taking a look at both of these things from an overall market point of view and then a SoFi point of view. Starting with the SoFi point of view, it's important to understand that SoFi is looked at as both a bank, but also still a very fast and agile fintech. But the pricing of these two industries are extremely different. Looking at a price to book ratio, which is how banks like to be looked at very often, you can tell that the averages between the banks versus the actual fintechs is very different. Even looking at the average price to book for a bank is about 1.1 times. And then actually looking at the average price to book ratio on a fintech is about 6.2 times. But then, whenever you look at SoFi's price to book as of today, whenever I'm recording this video, it is less than 1 times price to book ratio, placing it lower than some of the largest, slow-growing banks in the entire industry. However, I think SoFi's price to book ratio could more than double from here. Currently, SoFi's price to book ratio is 0.98 times, meaning it's even lower than the old legacy banks that are just snail crawling their way through their growth. If SoFi is able to keep up this amazing growth trajectory, then I believe that their price to book ratio will more than double over the next 10 years. But that's just SoFi, which is a single boat in an ocean in the stock market, right? And whenever we actually look at the macro environment, what we're looking at is the tide that raises all boats. I took a look at the most common and trusted valuation metric across the entire stock market: the price to earnings ratio. In terms of mid-cap stocks, which is exactly where SoFi falls, we have an average today of 13.1 times, which is actually below where the price to earnings ratio usually hangs out at around 17 times. Whenever you get more specific into the tech sector, that ratio can go up all the way to 22.4 times on average. That's a 30% jump just to get to the average, or a 71% jump just to get to the high end. And remember, over the longest time period, mid-cap stocks have actually outperformed large cap stocks by a little bit, about 1.3%, the difference of 10.5% to 9.2%. The risk is there as well, but if you're able to find the right stocks, the reward definitely pays off. So between the market sentiment and SoFi specific metrics, I believe that the stock valuation expansion will account for 40% of SoFi stock's growth. But lastly, for my third principle, we have demographic growth, which I have broken down into two separate tailwinds that are pushing SoFi's business forward, even if they're not growing internally. These two categories are market market trends as well as user trends. In market trends, there's a ton of amazing statistics here, but probably the most important is the overall digital banking industry in general that is expected to grow by 19.9% compounded annual growth rates till 2030. Or what about the technology space, where we're offering virtual cards, embedded finance, and all sorts of other products that are also growing like crazy. For example, like I said, embedded finance, a compounded annual growth rate for the next 5 years of 60% compounded annual growth rates. During a study done by Jupiter Research and Visa, they both concluded that the global virtual card transaction total is actually going to reach, right now it's 1.9 trillion, but up to $6.8 trillion. That's a growth rate of 29% compounded annual growth rates for the next 5 years. Even in the B2B sector, which is where Galileo has been really trying to grow, the compounded annual growth rates of cardholders is expected to grow by 16.5%, and 93% of businesses purported that they actually are wanting to get into virtual cards. This is a handful of studies and a myriad of different studies that were done on the actual growth of digital banking in general in all of the sectors in between. These are just some of the growths that SoFi could expect, even if they aren't to take more market share as the actual industry is growing as well. Which, I don't know if you've seen all the news lately, with deposits in banks actually being a severe problem, where SoFi is having the complete opposite problem, right? So obviously, I believe that we are taking market share as well. But now you guys are getting me off topic, so let's go back to user trends. According to a 2020 study by the Pew Research Center, that the millennial population will be the largest living population, actually outsizing the baby boomers. Considering that this is the exact audience that SoFi has gone after because of the age and their acceptance to technology, that this is exactly what SoFi investors want to see. And with that population growth is also the use of mobile technology for online banking, where a report done by eMarketer shows the largest growth in banking after the COVID-19 pandemic, which SoFi has seen massive gains for this, and it's not looking like it's slowing down. And lastly, the actual demand for financial services is expected to increase by a compounded annual growth rate of 14.8% all the way through to 2026. This brings the global online financial services space up to an $8 trillion market space, where I believe SoFi along the way is going to take market share every single year. I believe that the demographic growth will make up for about 15% of the overall increase in SoFi stock price over the next 10 years. But I'll leave you with this. Anthony Noto himself in his discussion of how SoFi Technologies will become one of the largest financial institutions in the entire world.
With that, I think we're almost out of time, so I'll just ask my last question. Where does Anthony Noto see SoFi in 3 to 5 years?
I'd say sky's the limit. Like the thing standing between us and being a top 10 financial institution in this country is becoming a household brand name. We think we have the right strategy. We think our products are best of breed in terms of the consumer value proposition. We think they're even better when you use them together. In addition to that, we own the end-to-end stack, and so we can innovate faster than others. We can do that lower cost. And so, 2022 was really the first year that we had all the key elements of that strategy in place. There are more cards to flip as it relates to that, but I will tell you the difference between where we are today and being a top 10 financial institution is about becoming a household brand name. It's about scaling the people, the processes, and the technology, ensuring we provide a safe and trusted experience, and doing that over and over and over again. And so we're not going to stop until we're number one at that list. But in the next 3 to 5 years, I endeavor for us to be in the top 10. And there's a lot of disruption in the industry. There's a lot of uncertainty. Being stable, keeping our head down, and executing tirelessly is really critical. And maybe there are other opportunities that present themselves to get us there even faster.